The Shriram Group certainly has been the cynosure of all eyes for the last couple of months, I would say. In fact, we had also caught up with the group chairman back when it was in the news earlier as well. But for now, the reason why Shriram Transport is in the news is on account of the holding company of Shriram Group's non-financial business, SVL Ltd, being admitted into the bankruptcy process. That's under the IBC and will now be referred to the NCLT. So let's then connect with the management, Mr. Umesh Revankar, the MD and CEO of Shriram Transport Finance. Mr. Revankar, good morning. Appreciate you giving us your time on ET now to clarify the entire issue and assuage all the investor worries. First up, we understand that SVL Ltd, that's the holding company of the non-financial business of Shriram Group, is being admitted to the IBC. And this has led to investor concerns with respect to corporate guarantees issued by your company, Shriram Transport, getting invoked. So what's the risk of that happening?
So this particular NCLT issue, if you look at, there is a dispute between one of the subsidiary of SVL and a customer. And the customer has approached the NCLT for the payment from the SVL. And the amount is small. The original amount is around 6 crores and it's only dispute. So I think it will be resolved at the end of SVL only. So I don't think it will have anything to be linked to STFC at this stage.
Okay, so it's a small amount that's currently the point of contention. So just to understand the matter deeper, like you said, it's a small amount. Initial amount is small, but it looks like the total amount is 700 crores. So could you confirm where does the total amount stand now? And also, what's the total exposure that Shriram Transport has to group entities like SVL, Shriram EPC or any other entity? What I want to understand is what's the kind of risk that could emerge here?
See, this exposure, STFC, what it had given to SVL, it was given in 2014. It was a 650 crores loan given to SVL. And SVL, in turn, it was in the commercial terms, in the rate of interest. Since our rate of interest was a little higher, after 1 year servicing the loan, then they repaid the loan. They issued the NCD. And when they issued the NCD, we had given a corporate guarantee because our experience with SVL was good at that stage. And today, the total amount outstanding as on date with interest is around 870 crores. But the maturity is only next year. Maturity is in June 2019. And I feel SVL will be able to handle this on their own.
So, Mr. Revankar, could you assure investors that the liability will be borne by promoters, and would promoters need to, perhaps monetize stake in Shriram Capital?
I think last time around, our founder has come on media and informed that the promoters will support this, and STFC investors need not have or do not have any risk of this being passed on to STFC balance sheet. So since the assurance is already given, the method in which it will be done or when it's required, that would be done by the promoter group. So I think that has been already addressed, or we have given clarification on the same. So it will be done at the appropriate time.
Okay, now we understand that you have been meeting investors. What are the key concerns that they've been sharing with you in terms of the overall business of Shriram Transport? Because, the stock has been under pressure. So what have investors told you?
No confirmation as of now. We have been discussing this for quite a long time. See, we are looking at the overall advantages for both STFC and SCUF shareholders. If there is an advantage of coming together, then only it will be done. So it is not yet discussed at even board level. So it is only an interim internal discussion between us. So I don't think it has anything to do with this particular incident.
Okay, so that was actually Mr. Revankar speaking about the media reports, about the merger of Shriram Transport and Shriram City and the development that has taken place. What about maintaining margins? Can you put a number to where you see margins for FY19? What's the rise in the cost of funds as well? And what kind of improvement we can expect in return ratios over the next 1 to 2 years?
Right now our net interest margins are around 7.45, and we should be able to maintain around that for this year. And as far as our ROE is concerned, in this quarter it was around 16.6 quarter end. We should be able to move towards 18% ROE by next year, because there is improvement in credit cost also, and also we are able to have a bigger growth compared to the previous year.
All right, Mr. Revankar, we really appreciate you giving us your time and explaining to all our viewers what exactly would be the step and the way forward for the Shriram Group from here on. It's something that has worried investors a bit, but interestingly, for the Shriram Group, or at least for the stocks of the Shriram Group, doesn't look like it's being reflected on the stock price, at least, because Shriram Transport higher by 2% Shriram City as well is gaining, with similar momentum. That one's down, actually. I stand corrected. That one's down by about 1.8%. But you look at even the smaller names like Shriram, EPC, etc., that too is up by about 2%.